Yeah, open her up.
Okay, welcome everybody. Hello, you are in the right place if you're here for the Micro IPOs, Digital Assets, and the Future of Financial Inclusion webcast. We're just giving everybody a few minutes here to get settled into the room, to join us. Just so you know, as we go through, we're going to be talking with some incredible guests today. It's going to be really, really exciting. We are Exponential as a company really deep into digital assets, and I know that a lot of people have a lot of questions about this. So we're going to dive into what digital assets are, and what micro IPOs are, and what impact they have on the world, and what's really available today. So be excited for that. If when we go through you have any questions, feel free to put those questions inside of the comments inside of Zoom. We've got a moderator in there, John. He's going to be fielding those questions, and at the end we have a Q&A section. So if you have burning questions, please put it in there. John will be capturing that and feeding it back to us, and we can get those answered at the end of the webcast. Also, while you're listening through to this, if you're interested in finding out more information, or you're ready to take some form of action, you can go to our URL, which is go.exponential.io/IPO info. That's go.exponential.io/IPO info. On that page, you'll be able to book a call with one of our team members. You'll be able to access funds that we have available. You'll be able to see a whole bunch of different things. And again, we're just waiting for people to show up. Hello, everyone.
Early.
What's that?
We're a few minutes early still, right?
We are a few minutes early. We are going to be starting on the hour, but we're recording right now. So why not make it sound great? Awesome. And I'll check back in just a moment.
We are streaming live to Facebook. I think we're streaming live to YouTube, as well as YouTube live events. And that's it. That's all the play. And here on Zoom, obviously.
Awesome. And I'm super curious, if you're here right now, please in the chat, just put down where are you calling in from? What part of the world? We've been very fortunate to kind of build a network of some pretty international people. I saw we had people from Gibraltar, from North America, from I think Singapore. I noticed all different parts of the world. Where are you guys from? Awesome. We're about 1 minute away from getting started. Really, really exciting. What are you excited for, Corey?
I am excited for all the amazing words that are going to come out of Kyle Fry's mouth.
Me too.
I won't charge you.
No, I'm willing. If you send me a wallet address, I'm more than happy to send a donation based on the quality of your expertise. All right, so attendees are just showing up in the room now. Yeah, let us know in the chat where you're from. I am joining you today from beautiful Taos, New Mexico. Sonny, where are you today?
Today I am in beautiful Bonita Springs, Florida.
Lovely.
Yeah. Kyle, where are you?
Just outside of New York. I got out before the big trends in the virus.
Got it.
Very fortunate.
And Steven, you're out in California, yes?
In LA.
LA. Beautiful. Okay, I say we get started. Welcome, everybody. Thank you so much for being here for this webcast. We're really excited to bring this to you. The webcast, of course, is Micro IPOs, Digital Assets, and the Future of Financial Inclusion. So we have some amazing guests here today. We're going to be talking about all things digital assets, micro IPOs. Maybe you have questions about that. What does this mean? How does it apply to me? How does this affect the world? We're going to be diving into this. It's going to be a panel discussion format. We have some incredible speakers, as mentioned, part of the Exponential team with years and years of background in the financial world and digital assets. It's what we do day in and day out, and I'm really excited to get your questions answered. If you have questions, we are going to be doing a Q&A at the end of this, so please put those questions inside of the chat feature inside of Zoom, and we have a moderator in there, John. He's going to be answering your questions live if possible, and if it requires a bigger explanation, he's going to be feeding those back to us at the end. So please, if you have questions, put them inside of the chat so that we can make sure that you get that answered. Also, as we be going through, you'll notice if you're ever interested in moving forward, learning more, connecting with our team, learning more about IPOs or micro IPOs rather, go to the URL that we've set up for this. So that's go.exponential.io/IPO IPO info. go.exponential.io/IPO info. From that page, you'll be able to book a meeting with a member of our team. You'll be able to access different funds that we have available and potentially get on our email list to get updates about new webcasts and things like this. Really a lot of great quality there, so be able to check it out. You'll also notice at the bottom of each of the slides after the first one, that URL is at the bottom. So, okay, so let's get going. Welcome everyone, ladies and gentlemen. Corey, if you could move to the next slide, we're gonna just get we're gonna get through the disclaimer quickly. And the disclaimer is this, coming up right at this moment. So the content contained in this presentation is for informational purposes only. You should not construe any such information or other material as legal, tax, investment, financial, or other advice. Nothing in this presentation constitutes a solicitation, recommendation, or endorsement. You can read the rest there as it comes up. Thank you, Corey. Where are we? Or endorsement offered by Exponential or any of its partners to buy or sell any securities or other financial instruments in any jurisdiction in which such solicitation or offer would otherwise be unlawful under the securities laws or jurisdiction. All content in this presentation is information of a general nature and does not address the circumstances of any particular individual or entity. Nothing in this presentation constitutes professional and/or financial advice, nor does any information in the presentation constitute comprehensive or complete statement of matters discussed or the law relating thereto. You alone assume the sole responsibility of evaluating the merits and risk associated with the use of any information or other content contained in this presentation, including any decision based on such information or content. Wow, that was fun.
That was super fun. All right, now Kyle, you read it.
Yeah, now our lawyers.
You did a great job.
Thank you. Now that our lawyers are smiling and I won't get a lot of angry emails, we can get actually into the content here. So let's move down to our speaker slides. So coming to us, the Exponential team, coming to us from the Exponential team, we have 4 speakers today. We have myself, Sonny Durante. I'm the Director of Marketing for Exponential. I'll be hosting today. And our speaker lineup, it consists of Kyle Fry, who is President of Exponential, Stephen McClurg, who is our Chief Investment Officer, and Corey Marchesine, who is our interim head of ventures and director of relationships. So thank you all for being here.
Yeah, thanks for having us.
Yeah, awesome. So I'd like to start with a very interesting quote that I heard. So Robert Greefield, former chairman and CEO of NASDAQ, has said that 100% of stocks and bonds that are trading on Wall Street today could be tokenized. And in 5 years, 100% of the stocks and bonds trading on Wall Street will be tokenized. Now, this sounds like an inevitability to me, and I'd like to address Stephen. What do you think to this? Why would he be saying this?
You're muted, Steve. There you go.
Now I've unmuted myself. I can actually speak.
I hope we didn't miss any gold there.
Just told you the purpose of life. So really what's happening is a lot of large asset management shops across the world, really. Some of them including ones that you've heard of, like BlackRock and PIMCO or Franklin Templeton. They are at max capacity as far as what they can actually invest in and still eke out a return for their investors. And what that means is with interest rates as low as they are right now, and a lot of these investors investing in bonds, there isn't a whole lot more room for, number one, to get additional return for their investors, and number two, additional returns for themselves. So they're constantly looking at all the various fees and expenses that are charged to asset managers and to their clients, and looking at ways to narrowing those. And right now, one of the best ways to do that, even though it's a few basis points, is through transfer agency fees. And what that means is, if a lot of fees that are charged anytime you transfer securities, it's currently in paper format. And if you can put those on the blockchain or make those electronic, meaning you're actually placing those securities on the blockchain and eliminating that transfer agent fee, then for an asset management firm that, say, manages $2 trillion, you're talking about 10 basis points of $2 trillion. That's a lot of money that can hit their bottom line. So that's what's happening across the board. Some some asset managers, like Franklin Templeton is a really good example out of San Francisco. They manage about $500 billion in assets. They've already applied for money market mutual funds to be traded on the blockchain using the Stellar network to eliminate transfer agent fees and to distribute it themselves, so you don't have to go through intermediaries to get there. So that's really what that means. Is it's happening. These large managers are already doing it. We're going to get there very soon. It's going to start with funds. Bonds have the next biggest opportunity to save investors money, and then stocks will follow suit as well.
That's brilliant. So you're really looking at it from these big investment houses just see the cost savings more than anything going into it.
Yeah, that's exactly right.
So interesting. Kyle, I'm curious to see, same question. What would be your response to this? Robert Greenfield stating 100% of stocks and bonds are going to be tokenized in the next 5 years. What do you think was the inspiration behind him saying that?
I think he's right. Yeah, no, I think he's recognizing what we're all seeing, which is, technology has shifted dramatically. And with the advent of blockchain coming out and removing a lot of intermediaries, I agree. For the most part, it comes down to cost, and cost is reflected in risk, and risk is reflected in trust. And the technology is removing a lot of the intermediaries that were built in the capital markets infrastructure over several hundred years. So the idea is that financial institutions can unlock capital that they're using in terms of having to have it for counterparty risk. They're moving intermediaries in terms of the settlement, and it all comes down to the trust element. So a lot of people are looking at this. I think in the current environment today, it's becoming even more apparent as most financial institutions are looking at their own financial statements and balance sheets and seeing the size of their mid-office and back office teams that are required for regulatory and compliance. And a lot of that gets extracted when you start using the technology of today. So I think they're taking really deep looks at it. You can open up the headline and every single day, and you could see large institutions, NASDAQ even joining with a blockchain firm recently, looking at these technologies because they see how massive it is. Now, there's obviously going to be a little bit of time and shift for them to materially change a lot of the big parts of their business. But the reality of it is I think everyone understands going digital is just better, faster, cheaper. And I think he's seeing that. And look, who knows, 5 years is a very long time away. But the reality of it is that we're seeing so much acceleration on a weekly, month-to-month basis in the industry. And there's actually going to be some pretty material exponential type curve as we see adoption set in. And I think that's exactly what he's seeing, is you can do this today with the technology, but there's going to be a bit of time in terms of adoption to get over that 5-year period.
So that's interesting. I think we've seen that before, right? I mean, people are not naturally wired to think exponentially, right? We think in a linear fashion, but we've seen adoption of technology like this before, curves where it's like nobody's doing it, or there's very little, and then all of a sudden, boom, it goes through the roof and everybody's jumping on board. I'm curious, so with this digitizing, companies doing that, bringing their cap table online, I've heard about the concept of micro IPOs, and I know that this is a concept kind of unlocked through digital assets. I'm curious if you could talk a little bit about, Kyle specifically, what is a micro IPO? How is that different from a traditional IPO, and anything else you want to add there?
Yeah, no, this is obviously something that's near and dear to our hearts, because it's democratizing access. It's giving ventures and founders and the people that are really innovating in the world access to capital as fast as possible. That's really the goal, right? Investors and those that need money, connecting them as short and as fast as possible. So in the traditional sense, a micro cap company would be considered anything below $300 million in market cap, which is pretty significant. I think in the context of what we're talking about is even smaller than that, all the way down to a few $1 million, 10 million, and even smaller than that as we build out the global basis. In terms of IPO, the word public in there means the difference between a retail investor or a accredited investor. That's the difference. And a lot of times that has to do with registration, regulatory requirements, and costs. There's ongoing costs and disclosure requirements. In terms of how companies think about this, there's 20,000 public companies in the United States, 10,000 of them are below 300 million. And the reality of it is there's 2 million private companies in the world. So there's a significant gap in between the number of companies that have gone public in terms of capital raising and those that are private. I think most people at this point understand the growth in private markets and the illiquidity of how much those have grown, the decline of the number of companies going public. And a lot of this is driven by cost, regulatory requirements, et cetera. So now we have the technology to actually significantly reduce those costs so that a company can either go public or go private, use the exemptions that allow them to raise capital outside of having to register being a public company, but still give them the efficiencies through technology to connect with investors on a global basis, to give them sort of a public type experience when we're connecting global pools of liquidity. So for us, micro IPOs, the reality of it is, the P part of the IPO may not be the right choice, and it comes down to the facts and circumstances for that venture or that assets to allow it to go to retail or not. For us, Exponential, everything we're building, the digital rails, where we spend our time, where we spend our investments, is to provide as far along on a global basis for investments to retail investors as we can. But the reality of that is that you have to navigate various regulatory environments and all these rules on a country by country basis. So understanding the interplay between those and what it may mean for the actual company. But there is a massive opportunity. And again, what we're building, the goal is to allow people that need capital to connect with those that have the capital, and connecting them those the easiest and most efficient ways. And just to give you a sense for the cost, I think it's still about $100,000 for a company to be public in the United States on an annual basis. And the technology that we're using today and the technology that we're building will significantly reduce that, which will allow the collapse of the infrastructure of capital markets to be even more direct connection between the investor and the issuer.
That's brilliant. So you're saying not only significant potential cost savings and just middlemen being pulled out of that, but it's also easier for the company to raise the money that they need to raise in a way that is just faster and maybe less regulatory burden and compliance. Am I hearing that correctly?
Yeah, no, that's exactly right. And then from an investor standpoint, I'm curious to hear your guys' thoughts on this, is, more opportunities to invest in different companies. And I think there's going to be a level of investment that layers on top of this. As you get more companies that you have access to, people will create pools, whether it's an SPV or funds that allow you to access, fintech or clean tech or something that's only specific to solar energy. All the companies in the world that solar, we can create a fund and you can invest in that fund directly, which will allow for you as an investor to have diversification, but also allow these companies to get the capital as well.
That's brilliant. Now, Corey, I heard, so we had talked offline a little bit about this, and you had a really interesting way of looking at who is benefiting from this and bringing it more into the context of a story. And I'm really curious, as we move into this world of micro IPOs being available, of companies having these, more revenue options being available to them, who really benefits from this and how do they benefit?
Yeah, you want me to tell you a story?
Please.
All right, I'll tell you a story. So let's start with what the dream has been for an entrepreneur. So if I'm a technology entrepreneur with a product that can scale really quickly, what's the fantasy I'm telling myself at the beginning of my enterprise? That I'm going to raise some money from friends and family. I'm going to create a minimum viable product or a minimum viable experiment, right, to show that this thing has value. I'm going to create a scaling plan. I'm going to bring in some additional capital, maybe go to some angels, maybe some venture capital. Maybe I'll have an A round and a B round and a C round, bring in lots of capital, keep increasing my value, keep expanding my marketplace. And then maybe in 8 to 12 years, I can have a large public offering on major stock market, the NASDAQ, New York Stock Exchange, the London Stock Exchange, what have you. And I'm going to take a big part of my cap table and I'm going to dump it onto these public markets. And after all of these speculative rounds with all this venture capital, we might be able to create a big speculative market on the public markets. And I'm going to create a tremendous amount of wealth. Maybe I can keep pushing that speculative value over the next 10 or 15 years and make a few $1 billion, right? So this has been some version of that story has been like the fantasy of the tech entrepreneur. So the problem with that story, from my opinion, is that there's someone very important that's excluded from that story, which are the end users, the world, the people who are receiving the value from that product, right? At no point over the course of that story are we focused primarily on increasing the positive impact that we're bringing out into the world, for one. So changing to this micro IPO model impacts three people. It impacts the entrepreneur because it changes their relationship with their enterprise, most significantly because in the old model, this CEO or this founder is spending 80% of his time over the first 4 or 5 years, maybe 6 or 7 years of his enterprise raising money, and 20% of his time focused on creating value in the world and iterating the quality of his product. This model sort of flips that around the other way, potentially, because if there's access to large capital market rails all over the world, and we don't have to focus on these private markets, suddenly this can be a lot more efficient. They can work with partners that are constantly feeding them capital as they go, and they can focus on developing something that's amazing and creating tremendous impact and focusing on their product and their customer, right? Rather than the capital market. So that's the really big one, right? Because the biggest beneficiary of this new world is the world itself. Because as we live in a world that's more and more impacted, and a future that's really being crafted by technology, I would like these founders and technologists to be spending the majority of their time refining their product and refining the impact it has on the world, rather than running around on a fundraising mission. So, the beneficiaries are the founders, obviously, the investors, because we've got a much larger swath of potential investors that can get access to these investment products very, very early, rather than at the end when they're just dumped on the public market. But most importantly, and most dramatically, are the consumers, the world itself. And I think that's wonderful and incredibly exciting.
So an end user actually has the ability to impact the technologies, the companies, the missions, the initiatives that are going out into the world, as opposed to just getting them way, way on the end when they're already 5, 6, 7 steps down the road and go public in the more traditional way. Am I hearing that right?
Yeah, that's exactly right. You're getting good at this.
Can I just add to that? I think
yeah.
the story that Corey started out on is a very, very small slice of the pie in terms of the type of companies, right? You do your ABCD and then you go public. Even on the private markets, that's obviously what Silicon Valley is very, very scaled to do. A lot of them invest in the same companies. It's a very small sliver. We're literally talking about the other 95% of entrepreneurs and innovators in the world. And the world is shifting, right? We have more technology. You can start a company at your computer. You can literally incorporate online for a couple $100, hire someone from another part of the world that's an engineer, and work on something together with a new idea. So funding the revolution of innovation is a big part of what we are focused on. And all of the digital technologies we're building and focusing builds the infrastructure for that. And I think that's one of the most important parts is we're creating a better world to allow people to innovate and become entrepreneurs much easier and faster and better, because all the great companies that you see going public are amazing companies, but that's literally the smallest sliver of the types of entrepreneurs and innovators in the world today.
I get you. So you're saying that. So well, you said, and what I'm hearing as you go through that is just that there are so many incredible companies that we're just never getting access to. We're never getting opportunity to even hear about what they're up to in the world, because they don't, they're not following that traditional little model. Is that correct?
Yeah, and honestly, especially in an environment like this, there's probably a lot of great companies that we'll never know that probably just ran out of money with the right ideas, wrong timing, etc. Had the great founding team, etc., but they just didn't have the capital or the purview because somebody didn't want to make a bet out at West. So,
Kyle, the trend of IPOs has been like squashing over the last decade, right?
Yeah, there's a lot of reasons for that. It's expenses, Sarbanes-Oxley. I mean, even reverse mergers declined. I think it was 800 a year, and then in 2008 or 2009, it dropped to 100 because of some fraud in accounting from some firms going public. So it's been 50 to 70% decline over the last 20 years because of how expensive it is. And if you look at most investment banks, like Credit Suisse, et cetera, they're all levered and built around these unicorns, right? To IPO them, to do the equity capital markets initiatives, to do debt capital markets, to do M&A, to do equity research. It's all these monster companies, and there's not really an infrastructure built around some of the smaller folks.
So, Stephen, I'm curious what your perspective is on this. You've heard from both Corey and Kyle here. What is your opinion on either what they said or who's really going to be benefiting from this new digitized micro IPO enabled world?
Well, let me back up a little bit. What's really interesting about what Kyle and Corey have been saying is the lack of access of small companies to capital markets or just capital, period. And really what's happening is a lot of small and even medium-sized companies are getting squeezed out. So if you look at where investment trends have been over the last 10 years since the Great Recession, the bigger companies have just continued to get bigger, and investors typically only want to invest in index ETFs. So the large ETFs, like the S&P 500 based ETFs, or the NASDAQ based, or the Dow based, what you'll notice in a lot of these ETFs. So for instance, SPY, which is an S&P 500 ETF based on the S&P index. If you look at the largest companies in that index, Microsoft represents 5 or 6% of that fund. Apple represents 5.5%. Amazon represents 4%. Facebook represents 2%. And you start adding it up, and between Microsoft, Apple, Amazon, Facebook, Google, those companies represent over 20% of the entire index. And so the bigger companies are getting bigger and getting more capital because they're part of these big ETFs that everybody wants to be inside. And the small companies are getting squeezed out, and even the medium-sized companies are getting squeezed out. What's really interesting here is that through digitization, through the ability for broader access, people can actually get access to these other companies, right? And what's also really interesting here too is you're getting an outsized allocation in most capital markets to these large companies in one way or another. So beta is basically becoming the large companies. But if you want to actually get any type of returns that aren't pure beta, you really have to start going to the micro caps, to the small caps, and to even the medium cap companies.
Interesting. Could you speak more to that and maybe define, just for anybody who's not familiar with it, the idea of beta companies and what you're meaning by that?
Yeah, beta is just the return profile that you get by investing in the general market. And high beta, meaning it's almost a 1-to-1 ratio to the markets themselves. And if the market really becomes 5 companies, then beta becomes just investing in, you might as well just invest in Apple, Microsoft, Google, right? And Amazon. Which drives their market caps up, and it causes people to ignore the other companies. That's why oftentimes a lot of small cap and micro cap companies over time have outsized returns to large cap companies, because they're often overlooked by the market. And when people do make those investments, they're supporting these companies that are trying to grow.
Steve, I've got a question. So we're in a really interesting moment in time here, where this ecosystem, this digital security ecosystem, is developing, evolving, expanding, legitimizing in so many ways. where this ecosystem itself represents significant potential alpha and is also developing the means to facilitate this future version of reality. I mean, how, as an asset manager, are you thinking about creating, ecosystem-wide exposure over the next, over a long period, over the next 5 to 10 years? What do you think that's going to look like?
Yeah, well, Kyle actually said it earlier, and I agree with the statement that it's actually very hard for people to, in mass invest in a lot of small companies. Really, the best way to do it is through funds. If you want to get fintech exposure, invest in a fund that gives you broad fintech exposure to 100 different fintech companies that might be small, micro cap, medium cap. And I think that's actually the best way to do it, because when you invest that way, if you try to pick a winner, then you've got a 95% chance of losing all your money, right? But if you broadly invest in, say 100 different companies and a few of them fall out, and you didn't pick the right one, well, the returns from the other companies will make up for that. And that is generally how investments work over time. You generally do better investing in a broad index than just in an individual company. People always tell stories, or you hear stories about, hey, yeah, I invested in Apple when it was 10 cents. And everybody talks about their winners, but nobody talks about their losers. That's it's called survivorship bias. And so there's massive survivorship bias, but I think that's really the way it's going to work. I want to invest in fintech right now. I want to invest in distributed technologies right now, and I want tools. I want vehicles that I can do that in. And since they don't exist, I just have to kind of put it together myself.
Don't you think it's interesting that the term fintech, right? That's been in the financial world, that lexicon for a long period of time, is expanding now into the lexicon of the general world, because now it represents something more than just like a technology vertical. It's starting to represent change, right?
Right.
Yeah, financial technology now represents the evolution of an old economic system that seems to be broken and exclusive rather than, anti-fragile and inclusive. And so a lot of hopes and dreams are now getting wrapped in to this term that just a few years ago was just a discussion about a technology vertical.
Yeah. Well, when people think about fintech companies, and frankly, this is the connotation that I'm using, is some small tech company that's disrupting finance by taking out all these middlemen. Well, the reality is a lot of large traditional financial companies have really become, or are becoming, fintech companies themselves. I mean, if you think about Goldman Sachs and everything that they're doing in the technology space, everything that they're doing with robo-advisory, disrupting their own businesses. Think about Schwab. Schwab, for the most part, a lot of what we see is a fintech company. It's an online platform that you can go in and trade as a retail investor. Now, they do a lot of other things that people, that the general public doesn't see, that isn't necessarily fintech, but they're moving there. I mentioned Franklin Templeton earlier. They're a very old traditional large asset manager that does boring things like bonds, but they're building systems to disrupt the rest of the industry so that you can get access and access to digitized bonds and digitized funds that eliminate paper transfer agents. So there's a lot happening right now, and a lot of traditional financial firms are embracing using technology for exponential growth. The ones that don't, I think, are going to be behind.
It's brilliant. I'd love to just invite, so we're talking about a lot of big concepts here, obviously some great back and forth. I'd love to invite anybody listening or watching right now. You likely have questions. Feel free to put those into the chat. Again, we have a moderator there who's going to put those, compile those so we can talk about those in the Q&A section at the end. And also, if you're interested in finding out more about this, you can head over to go.exponential.io/IPO info. And something just triggered for me while I was listening, guys. Corey had not Corby, pardon me. Kyle had mentioned a little bit earlier when we were talking about the benefits of this technology and what this kind of revolution means. One of the things he talked about was on, with the potential decline or trend of decline towards traditional IPOs. You had mentioned that there was something around fraud. Now, I'm not familiar with that, but like what actually happened there. However, one of the, I think, big upsides that would be worth talking about here is, I know that with digital assets and distributed ledger technology and putting a company on that, one of the big upsides is its immutability, is its ability to not be tampered with. And I'd love to open it up to anybody on the panel to talk about, what that looks like and what real benefit a company might see by putting a company on, by putting their company onto the distributed ledger, specifically around security. Or not.
That's got Corey written all over it.
Yeah. All right. I think everyone was waiting because it's like a forehead slapper, right? It's like, well, what's the benefit? Once you digitize a security, once you've got a digital version of a cap table, you've got a few benefits that are profound. The biggest one is the ability to trade and settle and have those reflected automatically. Anyone who's ever run a company and is trying to keep their cap table sorted with lots of investors knows what a nightmare this can be. The idea that cap table can have corporate actions and adjustments being made automatically while shares are being traded on that cap table on exchanges all over the world almost just seems too good to be true. It seems like some forward, like a sci-fi fantasy that might be available in 20 years. But the reality is that the technology exists to do that now, that we have the capacity to do that right now, including the ability for oversight in real time, both in like an automated sort of bot sniffing sort of thing, looking for any irregularities that might happen, as well as manual auditability of absolutely everything that's happened in regards to the entire cap table and the corporate actions therein. And we could talk about that for hours. It would be a way less interesting panel discussion. Yeah, I mean, Kyle may have some additional input.
Yeah, no, and one thing I want to be clear about, though, is that technology doesn't change the fact that bad actors exist. It's not a panacea for life and world peace by any means. Fraud's fraud. People will always be trying to take advantage of the system. But automating a lot of the processes in place and KYC and AML exists in a very meaningful way, and all that information is entered onto the blockchain and maintained into perpetuity. Whitelisting in terms of the way. So, in terms of finding high quality assets and doing due diligence, that doesn't go away. And that's where it goes back to what Stephen was saying too. And what we're building is trust us, because we're going to be the ones investing. If you want to invest in clean tech, fintech, et cetera, where we see demand, we're going to generate these funds in order to invest in those specific areas. So you need to do your own research. The reality of it is, but in terms of the technology, all of the steps and things that are automated are embedded in one single database, distributed ledger. And the interesting thing is, and I don't think we talk about this enough, we talk about regulation in terms of complying with it, but regulation actually wants this. Regulation actually understands that blockchain technology can be very powerful. Most of the securities fraud that the SEC pursues is a reactive mode. So they're backward looking at something happened years ago. But if you can program automated compliance into a smart security, the trade can't go through unless all legal and compliance has actually taken place. And in fact, if you have everything in one distributed ledger, particularly depending on change, you can give access to regulators to review it in an automated digital way. And so in fact, it's much easier for regulators to dig in and stop a lot of the things that are happening in terms of how that's working. So, I think smart contracts and the way, the guys at the Global Stock Exchange in Gibraltar are building in terms of smart securities and the ability to make these trades, compliance happens, and being able to show that transparency layer to the regulators. Today, again, a lot of the like ICOs and a lot of the frauds that took place today was because people could go online and buy and there were no rules or anything. Everything here is regulated. It's permissioned. We have to know who you are before you get in and transact. And that's obviously something that people really need to understand. Go ahead, Corey.
Adrian had posted in the chat that mutable equals trust, and I first heard James Tond say it. So I don't know who coined the phrase, but James had said to me, "Absolute trust scales absolutely," right? And that's what's developing here, is that once we have programmatic compliance, immutable compliance, that we should have the capacity to scale dramatically without, armies of millions of auditors. I always picture them with a little visor and their sleeves rolled up, auditing paper ledgers to look for irregularities. It's profound.
Hey, Sonny, do I have permission to ask a question?
Yeah, go for it.
All right, Stephen. So in this environment, picking the winners and losers, the current environment in terms of where we're at. I know you tweet a lot and have spent a lot of time on airlines, lots of background in debt, capital markets, et cetera. Curious thoughts, winners, losers. I mean, for us, obviously being the digital paradigm, you could see Zoom is absolutely crushing it. Peloton is absolutely crushing it. These are obviously big household names, but I'm curious, maybe one, how you think about, and you don't have to pick names, broadly thinking kind of winners and losers a bit in terms of current environment, but then maybe perhaps draw that back to something that hits us a little bit more home in terms of Exponential and where we're focused. But curious your thoughts there.
Yeah, so I'm going to talk more about sectors, and because I think that's a little bit easier to do. Airlines. What was really interesting is this week the CEO of Boeing came out and said that one of the major U.S. airlines will cease to exist, and who knows which one that will be. But if you're the CEO of Boeing and you're the chief supplier to these airlines, you probably know better than anybody else. So that's a scary thought, right? So really, things like airlines.
I hope it's not the airline that I have 1 million frequent flyer miles on.
Yeah, no, that's exactly right. I probably have a few vacations saved on multiple airlines. So as long as it's not one of the ones that I'm, invested in through airline miles, I'm okay. But so things like travel and hospitality are really going to hit. The things that I worry about the most are actually a lot of the, I would call them the mom and pop businesses around the country that just don't have access to capital and haven't been able to access, the PPP and can't open. And that's really concerning, because a large portion in the US anyway of, and this is globally as well, of employment is in private independent businesses like that. The ones that are growing, obviously you mentioned Zoom and Peloton. Those are two products that I use every single day and have been for the last 6 months. But I think in general, the equity markets are at a bit of a peak. They're very, very overbought. We're talking about price to earnings ratios of north of 18, which for unemployment rates of over 20%, 18 is a very high PE ratio. And that's based on, I would call it very aggressive earnings. I think people aren't discounting earnings as much as they should. So we'll see where that goes. But
you're using very politically correct language. I'm so glad that you're addressing this. I would be swearing, right? The PE stuff is lunacy. It's lunacy.
Yeah, no, it really is. And you have to remember what drives bull markets and what drives markets higher. what drives markets higher is that somebody puts money in hoping that they'll get it out at a higher dollar amount. So I don't know a single sane individual right now that, or even a professional investor that's thinking, I'm going to put money into the equity markets and I hope that the PE ratios get to 20 because now I've made a return. The markets that really the only markets that make sense right now are the bond markets. And what's scary about the bond markets is that the 10-year is under 1%. As a matter of fact, 10-year rates are being predicted to go to negative 25 basis points in the next 18 months by most bond money managers. And you ask yourself, well, how can it get there? Jerome Powell just came out yesterday saying that he would try to prevent the Fed fund rate from going below zero. Well, it doesn't matter if the Fed fund rate goes below zero or not, people will continue to push down the yield. The market is what will push down the yield on things like 10-year treasuries, creating an inverted curve, which is usually the sign of a recession, which is essentially what we're in. But going back to the bond markets, the reason why the bond markets make sense, why you would want to invest in them at even low rates, such as they are right now, is because you believe that rates will go negative. If rates don't go negative, then you get no appreciation and you're earning 50 basis points, right? So they have to go lower for it to even make sense. And by the way, if they don't go negative, then that means that you don't earn enough money to make it worth the risk to go into, investment grade bonds or US treasuries or other high quality sovereign debt around the world. So where would you put your money? You're going to put it in the equity markets? No. But it really leaves the other area, the second area that I like other than bonds right now, and that's venture and private equity. I think there's a lot of opportunities, usually during a recession or any time of economic downturn is when the best companies that are solving real problems come out. So I really like venture deals right now. I mean, Corey, you're the head of ventures at Exponential. You get a lot of great deal flow. I'm very curious to what you're seeing, what real problems are being solved. But that is, other than bonds, ventures, the other place I would go, and real estate too. By the way, there's going to be a lot of opportunities in real estate.
Yeah, I mean, like we had discussed, you and I, right at the beginning of this crisis, once we started to realize that so many people were out of work, that this evolution of the gig economy, these new ways to engage people with a potential market so that they can provide value into the world above and beyond just schlepping someone from place to place via Uber or bringing someone a cheeseburger via Grubhub or Uber Eats, that, the communities need to be applications that bring communities to market and allow people to interact and transact, are developing really, really fast because this need now exists. People are out of work but it doesn't mean that they don't have value. And it also doesn't mean that their value isn't required by someone. It's just that this enterprise that existed in the middle that was connecting value creators to consumers has fallen apart because it's undercapitalized and they ran out of money and they couldn't pay their rent. But it doesn't mean that the need doesn't still exist and that the people who want to provide that value doesn't still exist. So something new, these new things need to emerge in the middle to connect these people together, a la Uber and those sort of gig economy things. But this new evolution, and I'd love to come up with a new term rather than the gig economy, but it's this next thing that, like a flower that grows out of that, and we're keeping a really close eye out for that.
Yeah, well, and the term that I've heard a lot over the last year is the future of work, and we were already trending this way before Corona, right? So a third of all U.S. workers were already becoming freelancers, contractors. Some of the more traditional careers are, nursing is a really good example. There's a vast majority of nurses aren't full-time workers. They work for hospitals on a part-time basis on the weekends, at nights, around their kids' schedules. and they choose that lifestyle. Nurses might work 12-hour shifts in a row and then take a few days off, similar to say firemen, right? Or you take truck drivers. I don't know if you know this, but like in 17 states in the United States, the biggest economy is truckers, and we're noticing it right now because there's supply chain disruptions and people are moving goods to houses directly. But that's another career where you might work for a full 3 to 4 days on and then take another week off. And these are lifestyle choices, right? People are moving more and more to these lifestyle choices and to these careers where you can choose your own hours and not sit in a cubicle from 8 to 5. I mean, who really wants that, right? But in this new economy that could be emerging right now, and that we've seen in the last 8 weeks, people are going to start thinking about, okay, well, what kind of career, what kind of job can I have where I can set my own hours and schedule, be able to work from home, or go out and like as a truck driver, as an example, go out for 3 days and come back for a week. But what are things that I can do now? And then what kind of companies support those types of careers and choices? So I'm very interested in that as well.
Oh, I'm fascinated with, so hearing this, let me first, anybody who's listening, if you have questions about this, again, please put them into the comments. We will be doing a Q&A section at the end. And you can go to go.exponential.io/IPO info for more information about this. But something that caught my ear as we were going through this was the idea of ventures. So Stephen, you talked about ventures being a really good investment right now. And this ties into kind of the next point that I wanted to talk about, which was the idea of financial inclusion. So we've talked about these micro IPOs, digital assets, that they are beginning to unlock some accessibility that wasn't there previously. And I know ventures as a particular, specifically that asset class, has traditionally been something that's only available to people who are accredited investors or higher, which is really relative to the entire North American population, a pretty small amount of households. So I'm curious, Kyle, what you see with digital assets and micro IPOs, like what is the impact on financial inclusion? Like what is the potential impact of this, and how could it really make a shift there?
Yeah, and that's actually what I was just going to mention, coming off of Stephen's point about venture being the right approach. And I think you said it again, Sonny. It's typically not an asset class available for retail investors. It's through a long pension fund who may own some allocation, maybe up to 25% of their portfolios in alternative investments, some of which may be venture. It's probably one of the most important aspects of our mission is providing democratizing access to investments that people wouldn't normally have. That's exactly how the digital asset fund is structured, to give people diversification across there. Financial inclusion, broadly speaking, essentially just means providing access to financial services on an affordable basis, meaning like getting credit or whatever for 30, 40, 50% is not considered affordable. And with the ubiquitousness of the internet, and some countries around the world not even having a banking infrastructure, going straight to mobile technology, is all the convergence of all these trends is actually pretty extraordinary. And the current environment is actually going to probably accelerate it even more. It's at least our view, or my view, in terms of going digital even more. But for us, we're focused on digital security trading. The reality of it is the infrastructure of digital security trading, in terms of allowing investments, that's going to build the entire digital infrastructure for a whole new world of third-party applications where you can get deeper using this infrastructure for insurance, for banking, financial services, lending, all the things. Literally an open app marketplace, which is, call it our 10-year dream. JW would probably say sooner. But the reality of it is this marketplace.
4 to 6 years.
Yeah, that's always a good time to throw out there.
6, yeah.
It's far enough away. This isn't being recorded, right? So this idea that there's this marketplace where you're connecting global pools of liquidity and needs and desires of people on a global basis, that should make everything cheaper. Cheaper means access, and access means more innovation, more prosperity for humanity. Like, this is where we kind of joke around what's the right way to say it, but the smart thing and the right thing are the same thing, meaning the smart thing is like, you want to make returns. You're an investor, is perhaps the right place to go because of the innovation, secular trends we're seeing. The right thing is, let's all save the world. We're all in this together. Let's try to raise the floor of what is a meaningful living, and how do people get, you can actually do both at the same time, which is great, which is why this technology is so interesting as you converge these two things, which is really exciting. So which is what we're focused mostly today on, this digital securities aspect. I think Corey could probably talk about some of the non-fintech related investments we do, but that's really the purpose of the thing we're building. But the reality of it is, this technology allows for this base layer of things that we're focused on, but all of these other services are going to be able to plug in, with hopefully allowing people to have access to things that they could never have access before on an affordable basis.
Now, I really want to get to the question, so I'll just say really briefly. Maybe 10 years ago, the idea of banking the unbanked in the rural portions of Guatemala was within the purview of, some small ventures and mostly NGOs, right? But right now, we're starting to realize that these are some of the largest market opportunities in the world, and that by providing banking rails and banking access via these innovative financial technological products for these rural communities in South America and in Africa and in parts of Asia, especially island nations, that it has a dramatic effect on the entire world, on all of these markets together. This idea that the good thing and the smart thing are now the same thing is becoming more and more true every day. And you don't have to go into a boardroom and try to convince a bunch of institutional investors that this is the case. They're starting to understand this as well. COVID has taught us a lot of things. But I think the most important thing that we've learned is that this world is interconnected more dynamically than I think that we ever really understood before, until we realized how this thing can just move between us so quickly. And those same rails, right, that move the virus amongst us also moves our economy, also moves the interchange of value. And that I believe that all of that is a proxy for love, right? And if we want to repair the world in this way, then we really need to think about it this way holistically. And more today than yesterday, more people are jumping on board to this lens of the world. And for that, and probably that alone, I thank this virus. That's the only thing I have. You don't have anything nice to say, don't say anything at all. For that, I thank it. For everything else, I give it the finger. But for this,
So
can I just 10 seconds, Sonny, on that one? One more thing we always kick around and say is this idea of vote with your dollars, right? That voting people from a political perspective may not yield results in terms of the objectives that you may see in terms of how the world should shape, but in terms of creating access for people to invest and use their money to invest in that founder, invest in that idea that you think is going to help change the world, invest in that thing. That's a much closer connection of you to impacting the world than through any sort of political movement. And we kick around that idea and talk about that a lot as well. But the reality of it is that's what we're trying to do. We're literally trying to democratize access. And so people can join this world and vote and move their own money, whether it's $1 or any sort of small discretionary piece you can invest in this world, and get a return while you're changing it and seeing it through the lens of what you want to change it at.
I love that you brought that up. There's going to be, sorry.
Oh, I'm sorry, Sonny. One other thing that, I mentioned a third area that I think is interesting, and that's real estate. And real estate is actually a great area that can be democratized and people can get a piece of right now. And one of the reasons why I like real estate is many people are fearful of it because of the last downturn 10 years ago. But this isn't a mortgage-backed security or a mortgage or a real estate-driven recession at all. There will be some after effects in real estate, but there's a lot of good opportunities here, and there's not a lot of money pouring into real estate at the moment. I think there are great opportunities in real estate. There's great opportunities for people to get access to certain pieces of real estate in the right way. So that's something else that we might want to consider as far as democratization of capital.
Yeah, I love that. And so, with that, with the idea of access, and thank you for bringing it up, Kyle, as far as the voting with your dollars piece, I love the idea that, a regular person, meaning a non-professional investor, is now going to have the ability to shape the world that we live in. And not only that, but the world that our kids live in, as opposed to just your traditional venture capital people, or accredited investors or professional investors who are putting money in and funding these ideas that then go on potentially to be the technologies that we all use and interact with in the world. Which actually leads me to my next point. And this is, I think, I'm really curious about this. So we've talked now about, this amazing opportunity that is digitization, that is digital assets for companies, for retail investors, for accredited investors, really anybody. Where are we at in the timeline? What's a future idea, and what's actually available for people to get into right now, whether they're retail or accredited or otherwise? Kyle, Corey, who feels best suited to speak about this?
Pick one.
Okay, Kyle, go for it. What's available today?
Well, I figured I've used the most words, so that's why I wasn't going to go. It's already happening. The reality of it is you can invest. So I'll talk about Exponential for sure. So we have the Digital Asset Fund, which I think most folks on this phone should be aware of. It's available to retail in Canada, but accredited on a global basis. We have our venture fund as well, where folks can invest in on a global basis as well. And those are, Global Stock Exchange has several listings. We're about to list one of our portfolio companies there, so people can actually start to get in here in a pretty meaningful way. I think for the one thing that we focus on is a global first strategy, meaning the United States is a tougher environment from a regulatory perspective. I think everybody's seen and watching what's going on in the rules here, and T0 has been leading that front, but there aren't a lot of opportunities being listed there now. I think over the next probably quarter, there's going to be a material increase in the number of opportunities and high quality issuances. In fact, we have conversations with sorry, I lost my headphone, 15 other issuers in terms of both from a venture perspective and also large asset class perspective that want to tokenize several $billion. We've talked to a very large professional sports team. And so there's a very large amount of opportunities, some which will be structured as retail and some that will not be structured as retail.
Beautiful. Okay, guys, I think we're near the hour here. So if anybody has to jump off, please feel free to. However, I'd love to move into Q&A now if you speakers are available. Also, if anybody is listening and they can't stay on for the Q&A, there is going to be an email that goes out with the webinar replay. So it's not something you're going to have to miss. So know that. If you do have any questions, please put them into the question and answer right now. And I see that John, our moderator, has been sending some questions over. So if you guys are up for it, any closing words before we jump into the question and answer? Corey, Kyle, Stephen. Great, let's get into it. So got a few questions here. So Grant Lawrence has asked, for a founder, what are the steps, cost, and time for a micro IPO? What is the ideal stage the company should be at? Who wants to jump there?
Well, I have an opinion, and I'll start, and then maybe Corey and Kyle can finish. Look, I think it's not for every company, first of all. I think it's for companies that have already built an MVP. They've put their own capital in to start a product, to get to a point to where they either can, or they either have people that are using a MVP product without revenue or with revenue that they can turn on, if it's without revenue, that they can turn on at any time. So I think if you just have an idea in your head, it's like, hey, yeah, I want to start this company and I'm going to build a rocket ship and go to Mars, and give me $100 million so I can do that. That's a terrible use of a micro IPO. But I always believe in founders putting their own skin in the game, building something, maybe gathering some resources from family and friends first, people that and trust, people that you may have worked with in the past, that knows your work ethic, that knows your abilities, that believe in you. And then you start going out and raising capital beyond that, eventually through a micro IPO.
I'll just add to that quickly in terms of it's facts and circumstances of the founder, the type of company, exactly where are you at in your journey, who's your target market, the life cycle in terms of your momentum. It's probably not going to be seed stage, etc. The reality of it is we'll probably get there eventually, but in terms of today, see it as another tool. And in terms of listing, most likely outside of North America, there are tools. Crowdfunding is actually a great way. I think Front Funder in Canada, with an O&M exemption, you can go beyond the $1 million. The SEC is looking at raising the threshold from $1 million to $5 million in the United States. So crowdfunding is actually a potentially good way to get funding outside of it. But in terms of what Stephen was mentioning, absolutely, this makes it cheaper and better. But in terms of when it's right for a certain founder and what the steps are, it's digging into the team. Where are you at in your journey? How are you thinking about it? What's the use of funds? Who's your target market in terms of geography around the world? Is it predominantly US focused? Is it offshore? And all of those things play into how we advise our venture firm portfolios to think about what is the right way to go raise funds, whether it's private placement or listing on an exchange, et cetera. And all these various factors play in. But I do think as we move along the shift, we'll see a lot more demand for these funds that pop up that will list and will invest in these companies and eventually get more onto these exchanges over time.
With you. Okay, moving on to next question. It comes from James Barlow. How well placed do you feel that companies earlier in their life cycle are to manage/develop the communication strategies they need to maintain shareholder confidence, given that they've had less time to bake this into their commercial DNA? How should they think about balancing the other side of the equation in terms of risk for an IPO? Who feels they can jump in on that?
Yeah, I'm not sure I completely understand the question.
And,
I know James Barlow, so I'm not surprised that he asked a very complicated question because he's an engineer and an artist and he thinks in pictures. But what I think that I heard is trying to figure out how to change or indoctrinate the organization into this other perspective, what the future of the company might hold and the existing shareholders. So I'm going to reform the question and then ask it to Kyle, right? So if you've got a company that's growing, you already have a bunch of shareholders, friends and family, and maybe a few operating partners, and now you're gonna go to maybe crowdfunding or some other sort of micro IPO, issue a digital security and put it on an exchange. How do you communicate that with your existing founders in a way that doesn't make them feel like they're being extracted from in some way, or they're missing out on some opportunity, or they've created this is going to create a bunch of risk?
Yeah, this is actually why we've developed our ventures team under Corey the way we have is we have a team that runs the platform side of our business, which is, we have conversations with you. We think you're an amazing founder. We invest in you. Then what? Right? We are very active in our portfolio companies. A lot of times we take board seats to have these exact conversations from a CFO, investor relations perspective in terms of what makes sense for you. How are you prepared for it? That's a lot of what we're driving. A lot of this is communication. So if you think about not going public and staying private, there are no rules. You don't have to tell your investors anything, really. You're telling them out of respect. And if they eventually ever want to get out or you want to bring in more, you want to get rid of some of the information asymmetry, meaning all this stuff. What do you want to communicate? And some companies are concerned about confidentiality and getting to a level where they're sharing their special sauce. And there's probably some things you want to be a little more reserved about in terms of what you're going to share. But that's a lot of the conversations we have with people. What are you trying to do? What are you trying to accomplish? And we actually actively want to go in and advise our ventures on how to navigate this, because the reality of it is we built it this way because we want you to focus on your business and your vision. We don't want you to focus on capital markets activity. You don't have to be an expert. We are. That's what we're going to focus on. So that the partnership for us and the model we've actually built with the platform team within ventures is to help you navigate all those complex questions. I would say there's no black and white answer here. It's like this matrix box where you actually have to plug in all the relevant pieces: technology, market share, geography, competitive dynamics, et cetera, et cetera, et cetera. But that's exactly how we go in. And I would have to understand the specific facts and circumstances of your company for sure, but that's how we built our business model. We want to actively manage you. You focus on your business. We'll focus on the capital markets aspect and how you connect with investors.
I don't know if James Barlow is still on, but to provide you some context, I think he might be Banksy. I'm not sure, but it's possible that James Barlow is Banksy. So I don't know. I may have just outed him.
Awesome. Well, thank you, everybody. Corey, if you could pull up the last slide in that deck, put it on the screen, please. I just want to take a moment to thank all of our speakers, Corey, Kyle, Stephen, and John in the moderation fields. Thank you guys so much for being here and sharing this. That's all the questions that we were asked. Our awesome moderator, John, was able to answer some simpler ones that came through. We really appreciate everybody's time. If you guys took time out of your day to be here, thank you so much. If you're interested in knowing more about Exponential, more about micro IPOs, talking to one of our team members, accessing some of the digital asset fund or some of the funds that we have available that are promoting financial inclusion, that are promoting these amazing things that we talked about here, please head over to that URL on the bottom of the screen, go.exponential.io/IPO info. Go.exponential.io/IPO info. You'll be able to book a call with members of our team, access funds that are available, find out more information, and really get any deeper questions that you have answered. So wanted to say thank you, everybody, for being here, speakers included. And until next time, have a great day.
Thanks, Sonny. Thanks, everyone.
Thanks for having us, Sonny.
So welcome.
Nice job. Bye.
Can you end the stream? Beautiful.